What's up, everyone? All right, so in today's episode, I'm going to give you my watch list for Monday morning, the game plan for the week ahead, and we're going to take a step back and look at my performance from last week to see if we can create a profile of the type of stocks I made the most money on. The reason is that if we can create that profile, we know exactly what to look for on Monday morning. Now, we should also look at some of the bigger losses from last week so we know what to watch out for in the week ahead. For those of you guys tuning in perhaps for the first time, my name is Ross Cameron. I'm a full-time day trader, and I want you to know that my results are not typical. I've been doing this for a very long time, which has given me the confidence to take some risk on some of my trades and to trade with larger position sizes. In fact, last week, I grew my account from about $800,000, which is a lot of money, up to over $1 million with $200,000 in trading profits. I would say my biggest position on Friday, someone asked me this in the comments, the biggest position was around $210,000. So that's the largest position. So I'm not using the full $800,000 in buying power, but I'm taking some risk. So for you as a beginner trader, you may be at a place where you're trading a simulator, which is great. Practice in a simulator before you put real money on the line. Or maybe you're trading with real money, you're trading with a couple hundred shares, maybe a couple thousand. What I want you to remember is not to try to compare yourself to me in terms of dollars, in terms of like total dollar profit, but instead focus on cents per share, right? Because if you can make 10 cents a share, 15 cents a share, and you could do that consistently with 1,000 shares, you're proving consistency. That's building a track record and proof of concept. Because really the only thing that's kind of different is that between you and me at that level is that I've just increased my share size to feeling very comfortable taking 25,000 shares. And then 30 cents is $7,500. I do that 10 times in one day, $75,000. Now a couple losses, maybe drops it back down to 50,000, but it's like the numbers get bigger, but that's a product of trading with larger share size. So I often say that profits are a byproduct of a dialed in process. So rather than getting yourself all fixated on the number of, the total dollar profit, let's focus on getting your process really dialed in. Okay, so with that, these are my metrics from last week, $203,000 in profit. And we want to look detailed, sort of, that's the high level, but let's get dialed into the last 7 days here and really try to figure out what was working. A big part of trading is pattern recognition, right? When you see a big green candle like that, what are you thinking? You've probably seen something like that before, and you maybe have had times where you bought right up here, and then what happens? Son of a gun, you catch a big red candle and it drops back down. So you already know from your own pattern recognition that buying right here is pretty risky. But what about buying right here or right here? Well, what you probably know is that if you wait for the first candle to make a new high, that often leads to the next rally up. So you've probably, just from your own sense of watching the market, have learned to notice that this is a safer place to buy. And you know that even when you only see this much, that it's better to wait for that pullback. And then boom, this is what you expect to have happen. This is a pattern that you've recognized. So let's look and see if we can find any patterns in my performance from last week that we can apply in a similar way. Right? If we recognize that, oh, this is a price range where I did particularly well on or poorly on, we should apply that certainly in the days and weeks ahead, because the market does shift, right? You have to sort of adapt to the current market, the current trend, the current theme. All right. So let's start by looking at a high level. We'll just start high level. So high level, best day of the week last week was Wednesday. All right. That's not uncommon. Usually if I have profit on Monday, I take more risk on Tuesday. If I have profit on Monday and Tuesday, I take more risk on Wednesday, and then I scale down going into the weekend. However, it also is just the luck of the draw that this is only 5 days we're looking at, and it just so happened that on Wednesday we had a stock that went parabolic. Okay, performance by time of day. Well, you could see I did really well between 6 a.m. and 10 a.m. I did not trade at all between 10 a.m. and then I had a couple of power hour trades that really didn't produce any meaningful profit. A little bit of profit, a little bit of loss. So those are more or less a wash. So there's a 4-hour window here, approximately 7, 8, 9 to 10. So really it's like 3 hours. So there's a window here from just a little bit before 7 a.m. until about 10 a.m. hard stop, with the majority of the profit, as it turns out this week, coming between 7 a.m. and 8 a.m. So I think that just is the luck of the draw that this past week we happen to have some stocks that came out with news right at 7 a.m. If they had come out with news at 7:30 or at 8, that trade would have been moved forward, right? So, but sitting down at 6:45 and staying until 10 a.m., that's definitely something that we should be thinking about. Okay, now let's look at price and volume. So profitability by far highest on stocks under $10. So again, it's just sort of right now when we look at these metrics, it's just kind of like, well, there were like how many trades from last week, and it just so happened that they were in this price range. But as we're thinking about what should I look for in, on Monday morning, well, I should probably look for a stock between 2 and 10, right? So let's mark that down. So just as a note, we're trying to create this profile of what to watch, and we're gonna have some specific stocks on the watch list as well. But number one, when we're looking at the scans tomorrow, we'll be looking at stocks between 2 and 10 with a preference. So that'll be a sort of a preference of that range. Okay, what else do we want to note? Let's see, we'll scroll down a little bit. So performance by volume traded, of course, that makes sense. I would do better. Now, performance by in-trade price range. Oh, see this, yeah, you know what? I don't think this data table is accurate because that's not showing all of the profit, not even close to it. So I don't know what that's about. All right, well, that's an issue with the software, I guess. So next one down, instrument. All right, so what stocks did I make the most on? Which ones did I lose the most on? So CYCN, FGL, CTNT, TARA, BJDX, ALBT, SNTI, NLSP, UPC, UMAC, Xena, GELS. Okay. Well, CYCN, what's interesting about this one was this stock was a no news stock. This one was popping up with no news whatsoever, which, kind of had me like thinking it wasn't really trustworthy, but it just kept going higher. It was sort of unbelievable. So a no news short squeeze kind of caught probably some short sellers by surprise. All right, so that one had no news. It is a pharmaceutical company, but it had no news. So it's a little bit unusual. Note that the float, 1 million shares. All right, let's look at float on FGL. We'll just check floats here on these. 10 million shares. Okay, CTNT. Float on this one, 388,000 shares. TARA float, 10 million shares. ALBT float, 700,000 shares. BJDX float, 500,000 shares. NLSP, 500,000 shares. So the float's either 10 million or 500,000 shares, something like that, but definitely under 10, or I guess 11 approximately. Okay, so we'll just mark that down. So, number 2, float under 10 million for sure, but under 1.5 million is kind of like pay extra attention to that. Couple stars on that. Okay. But we could also look at the biggest loser. So the biggest loser was RKDA. Float on this one is pretty low as well, 1.3 million shares. PPBT float on this one, 1.3. So, the 22 million shares on DJK, which is one of the biggest losers. But for the most part, the biggest losers fell within the same float parameters and price parameters. They were just losses. So we'll have to look a little deeper to figure out what I maybe did wrong on those ones. And then let's see. So performance by instrument volume. So I did better on stocks that had higher volume by the end of the day. And the reason these stocks had high volume by the end of the day was because they were obvious. So that's very important. 3, obvious stock. So what does an obvious stock mean? It's in the top 3 percentage gainers. So usually with stocks that are in the top 3 percentage gainers are going to be more obvious. So like right now, UPC, LAFW, and GXAI would be in the top 3. This was from Friday, but you get the idea. So let's see. And then performance by instruments relative volume over the 50-day average. Did the best on stocks with 5 times relative volume. Again, 5 times relative volume is typically the result of news, but in the case of CYCN, it just happened to be sort of a short squeeze. Uh, but there were some days that I did well. Now this is always interesting. So this is performance by relative volume of the 50-day average, and this is performance based on the prior day's relative volume. So performance by instrument prior day relative volume. So let's see. So now I'm a little bit confused with the way I'm reading this. Performance by instrument prior day relative volume. So does that mean I did the best on these stocks that the prior day relative volume was very low, but I also did well on stocks that had a prior day relative volume of 5x. So I'm kind of reading this differently than I typically would, because I'm just like, wait, is that what that means? The way I always thought it was that that's asking me that's giving me a report of the volume today compared to the prior day, and that if today is 25%, that it means the prior day had high relative volume because we're trading at a fraction of the prior day. But this now, the way I'm reading it, performance by the instrument's prior day relative volume would make it seem the opposite, that this would be a continuation stock where the prior day was 5x, and then I'm trading it again and it's still 5x today. And these would be trades where the prior day was 0 or very low relative volume, and then all of a sudden today it's 5x. So I guess it doesn't make a huge difference because I do well on both, but that kind of throws me off a little bit. Anyways, performance by I don't think there's anything to draw from here other than it is worth keeping an eye on possible continuation setups. So we'll look at that on the scanners. Performance by instrument movement, yep, 10%. So no surprise there. I do better on big movements. Performance by instruments gap, so doing better. Oh, well, so let me get this back to 7 days. I think it'll probably show the same, but so let's see. So yeah, 10%, most of the profit, but there was some profit where it was less than, which is interesting. That is interesting. And then performance by instrument gap. Yeah, most of the stocks had to be gapping up, so they were already moving in pre-market. And performance by instruments average true range. Interesting. Okay. All right. So I think what we can do now is we can recognize that this right here is a pretty good kind of close-up of the type of stocks that I did the best on this past week. So price range, a little tighter than normal, a little lower, and float, under 10, but also sort of extra attention to the ones that happen to be under like 2 million or 1.5. Has to be an obvious stock. Lots of traders watching it. And I think what we have going for us right now is that there's just the sentiment in the market is so much different than it was a year ago. A year ago, we had been in this high interest rate environment for like 18 months, beginning in 2022. We had the crash on the collapse of Silicon Valley Bank, First Republic Bank. There was just such poor sentiment in the market and a sense of hopelessness that a lot of people felt. And that started to shift this year, especially sort of as we got closer to the election. The market started to price in the possibility of Trump winning. And, regardless of how you feel about his politics, the market priced it positively, that if he won, it would be a positive thing for the market. That's how the market was pricing it. And so as we started to get closer and closer to November, we were seeing this bigger and bigger rally as, polls were indicating that he actually had a chance, and then that it was a really good chance. And then, of course, the Biden dropping out and Kamala coming in, like that sort of like was like, wow, that's crazy. When does that happen? Like, that's so disorganized. This is only good for Trump. And so then it pushed all the way right to final, November election. And then, so October was super strong, November was super strong. And now the market's at all-time highs, Bitcoin's at all-time highs, and sentiment is so much different. So all that is to say, you have a lot more people that are participating in the market, because they're remembering, how strong the market was when Trump was in office. And they're like, okay, I want to participate. I want to be part of this. So now you've got a lot more eyes on the market. You got a lot more people that are trading. And when you have a stock that's obvious, there's more people that want to buy it, right? It's as simple as that. So we're seeing higher volume. Higher volume means traders like myself can trade with bigger size. In the last 18 months, 22 and 23 of the trading years, I was sort of restricted of how big I could go because there wasn't enough liquidity in the market. It was just harder to size up in a big way. Volume was lighter. But now that volume's higher, I'm able to go back to the type of share size I was trading a couple years ago during like the pandemic, when you could get in and out with 20,000 shares with no slippage. And now all of a sudden you get 20, 30 cents a share of profit. You're up 5, 6 grand. You do that 5 or 6 times and it's a $20,000, $30,000 day. So sometimes traders are like, Ross, I don't understand, what changed between, this year and last year in terms of your trading. Are you just trading with bigger size? And if that's the case, why didn't you just trade with big size last year? And so this is sort of like the double whammy of a cold market. When the market is cold, you don't see as many stocks making big moves. But because the sentiment is poor, even when stocks do make bigger moves, they're on lighter volume because people are more timid, which means you can't easily get in and out with big size. So then, even though you might have some big moves, you can't take them with as big of size and you can't make as much money. So cold markets can feel especially cold in that regard. And then hot markets can be especially hot because not only are you getting more A quality setups, you could trade those A quality setups with bigger size because there's more liquidity. So the result is that there can be big variations year to year in trading performance and profit. And I've seen that in my own trading where I've had years where I did 10 times more from year to year, or I did, 80% less from year to year. So it's like that can be a little bit hard to kind of ride those swings, but at the same time, that's the ebb and the flow of the market. So that's what we kind of sign up for. And that's also, kind of part of being like so-called self-employed. Any self-employed business, you're going to have ups and downs, and you try to, do what you can to smooth them out, but that's just the nature of the business. It's not like we're just getting a steady paycheck each week. So, okay, so now when we look at the actual trades from last week, FGL, CTNT, so a number of these stocks, we did have some attention back on Chinese names this past week. Let's see, which one am I thinking of? Was it Tara? No, Tara, Biotech, CTNT. That's a funny one. CYCN was Biotech, FGL. This one, this was like solar or something. That's a weird one. BJDX, traded this one before. Diagnostics, SNTI, that was a big one. Biosciences. So, biotech is still kind of performing well. UMAC, this one had a Trump catalyst, but that one was strong on Monday, but that has pulled back since then. UPC and other pharmaceuticals. So I would say right now, in terms of sector, while news is certainly helpful, specifically focus on the biotech space, biotech and small cap pharma. That's the space where we've been seeing kind of the biggest winners from the last week. We did also have did we have a private placement? We did have a private placement catalyst last week as well. So that's also worth noting. So the private placements are still a strong catalyst. Okay, so that's noteworthy. And then, again, so if we look at RKDA, this was the biggest loser from last week. So RKDA lost 4,200 on it, which, it's not the end of the world to have that kind of loss on a week as good as I had. Maybe there's not much to sort of glean from it. It just was a lot, it is what it is. I look at the chart and I'm kind of like, I don't know how I lost on it. So you see some jackknife candles, right? Some topping tails. So for whatever reason, and it was actually up here that I added and then it dumped. This one just was a little bit more difficult. So I don't know that there's much else to look into it than that. PPBT, This is another one that made a big move and I just kind of botched it. So, there were a couple last week, I guess, that, you know, I just sort of botched, and, that's going to happen. I don't know. I'm not sure. I think at this point, I would just say maybe to be careful on chasing. On the one hand, a hot market is the type of market where I can chase and stocks will often still go higher, but I just have to be thoughtful about that. Okay, so now that we've taken a look back, we have a bit of a profile set for the week ahead of the type of stocks where I've done the best and where we've seen sort of the biggest moves. So this is going to be really important. We want to, you screenshot this if you want, and we want to keep this kind of on the desk thinking like, this is what I'm looking for. So tomorrow morning, when I sit down, first thing I'm going to do, I'm going to pull up a stock on the scanner like UPC, for instance, and I'm going to think, all right, what's the sector? Pharmaceutical. What's the float? 1.4. Nice. How much is it up? 220%. Okay. So all of that, even without looking at the chart, this is definitely interesting. And it's the number one leading gainer. Definitely interesting. LAFW, I'd have to see. It's not obvious that it's a biotech, so I got to click on the stock, look up a little bit more info on it. Healthcare Recoveries, data analytics company. So probably doesn't fit the profile. Oops, it doesn't fit the profile perfectly. It doesn't mean it wouldn't maybe work, but it's not a perfect match. So that's fine though. Oh gosh, I think I double open these windows. So yeah, so GXAI, this one. Yeah, NFT gaming. So that one's not in the profile. Again, I might, if it gives a good pattern, I might trade it. But basically my workflow on Monday is that I'm going to sit down, I'm going to look at the scanner here, and I'm going to be looking at the top 3 or 4 gainers. I'm going to look at their floats, and I'm going to look at the stock and see what sector it's in and check the price. If it's below $1 like this one, that's no good. This one, no good. These ones are a little cheaper, but they're between the $2 and $10 range, so that's fine. This one, the float's too high, so that one would be no good. So I'll be able to kind of get dialed in quickly. Now, if the top 3 gainers are all 50-cent stocks, then I can't just be like, okay, I don't like that, don't like that, don't like that, so I'll trade this one, because I have to remember that I'm focusing then on the 4th leading gainer. It's not going to be the most obvious one. It might happen to be the case that the one that is the most obvious doesn't happen to be a stock I like. And that's unfortunate, but I can't change the fact that, the one that I do like may not be as obvious today and therefore may not perform as well. So I do have to be thoughtful about that. So the plan will be first thing, 6:30, 6:45, pulling up the top gainer scanner, looking at the positions of the gainers, basically initially looking at sort of these data points, price, float, percentage change. Then looking to see, do I recognize any of the company names? If I do, then I'm immediately like, okay, this is a former Momo stock or one I'm familiar with. If I don't, then okay, that's fine. So then I'll click on the stock, I'll check to see what the sector is, and at that time I'll pull up the chart. And what I want to see is charts that are holding up nicely. So a chart like this would be wonderful. I'd be totally happy to see something like that. Seeing something like this, I'd be okay with, because I'd be like, all right, it made a move, it's holding up still. Anything like that would be fine. But I'm sure we'll be able to find some charts that are not as pretty, although they probably aren't at the top of the scan. But, something like this where it makes a big move and has already come back down, I'm not going to be interested. That'll be the top side of the move, most likely. I mean, it could curl back up, but usually not. Something like this again, similar. The move it's on the back side of the move, so that's not going to be as clean. So I wouldn't like that either. All right, so then I'll then pull up the charts. I'll decide whether or not I like it, what the news catalyst is, and then we're going right into kind of the technical analysis of the pattern. And is there an opportunity I can buy a pullback? Is there going to be a trade going into 7 a.m.? Yes, no. If yes, I can get my first trades going right into 7 a.m. If not, then I'll be waiting for stocks either that curl up or that have news at the top of the hour, bottom of the hour as we get closer to the opening bell. So let's look at a couple stocks on the continuation scanner for a second. So continuation scan right here. ARQQ. Well, this one's a little too expensive at $22 a share. Doesn't have a lot of volume right now, but it's got big range. PRZO. So this one is curling back up a bit. but it's awfully thickly traded. I don't know if it's going to work. G-Wave, too cheap. PSTX floats too high. RENB floats too high. SATL floats too high. JYD, a little cheaper. Not sure about that one. SMXT floats too high. MDAI, a little cheaper. So I don't see anything really at the top of the continuation scanner that is like something that made a big move and looks like it's set up for giving us some more trades. Huh, that's kind of unfortunate. Well, all right. So that's that. What about recent IPO top moving? Most of these have slightly higher floats, but that can be okay with a recent IPO because they typically don't trade like a big float. I mean, look, ZSPC went from like $8 to nearly 40. Holy moly. Gosh, that's crazy. Look at that move. That's unreal. Wow. Wow. That's pretty powerful. But again, the challenge here is poor liquidity, relatively light volume, big halts, big gaps, so hard to manage risk on. Probably not going to be easy to trade. Probably wasn't even on the first day. And I don't know that it'll be any better anytime soon. JUNS, nice curling back up. Probably needs news. It's a neurosciences. Okay, that's could be good. DMN. So the benefit of doing this is I may not say I'm gonna trade this like definitely tomorrow, but I start to get familiar with the stock. So when I see JUNS, let's say I see it on the scanner popping up and squeezing in a couple days, I might initially think, oh, 32 million share float, I'm not even gonna look. But now I'm gonna say, oh, well, wait a second, that's a recent IPO. So most of those shares are probably gonna be locked up. People aren't gonna be able to sell. It's not gonna trade like a 32 million share float. It's gonna trade like a lower float. CGTL. That one's a lower float IPO, so that might be something to watch in the coming weeks or months. Cask, CASK. Yeah. So I don't know. I don't see anything here either. So not for right now, anyways. So that really leaves us Monday morning with relying a bit more heavily on our top gainer scanner and our small cap high day momentum scanner. So that's what I'm going to be using to see if I can find stocks that are moving. And look, if you want to watch over my shoulder Monday morning, do a 2-week trial. I'll put the link pinned at the top of the comments. It's 2 weeks for 20 bucks. You can do a 2-week trial. You can use this software. You'll have access to it. Has the real-time market data. You can listen to my broadcast, you can watch my screen share, and you can go through some of the classes that are part of the Warrior Pro curriculum, which we give you kind of as a sampler to see, for you to see if you like it. So I would do that. And then you can watch me trade bright and early tomorrow morning. I will be live streaming right around 7 a.m. And hopefully tomorrow we have a nice top gainer scan. Hopefully we've got continued strong sentiment in the market. We're at a time of the year right now where we should have a tailwind, especially with the way things have been the last 6 to 8 weeks. So right now, it's just showing up every single day, looking for the obvious stock. And then once I see something that I can get dialed in on, sizing up quickly and trying to capitalize on the volatility. Thank you guys, as always, for tuning in. I'll remind you, as always, trading is risky. My results aren't typical, so please manage your risk, take it slow, and I will see you bright and early in the chat room tomorrow morning.